My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach you. Context night. Call me at 1-800-743-CNBC or tweet me at Jim Cramer. If you're not confused, you're not paying attention. We've reached the point of maximum disorientation, something that happens every earnings season when there's too much to keep track of, and the action seems to stop making sense. Even after a low-key session, Dow gained 46 points, S&P advanced 0.28%, NASDAQ climbed 0.19%. You have every right to be extremely frustrated. Stocks that should be going up are going down. Stocks that should be down are going up. Human sacrifice, dogs and cats living together. Mass hysteria! But there's a method to this market's madness, and you need to understand it. Otherwise, you'll have no idea what's going on. You know what a clueless investor does? A clueless investor is a bad investor. So let me walk you through some of today's craziest examples. And I'm going to start with Caterpillar. Caterpillar, the stock. Huge shortfall. In response, of course, the stock correctly plunged 6% in early morning trading. While I thought it was a bit of an overreaction, there's nothing unusual about a stock going down and disappointing numbers, is there? It's what happens next that's hard to explain. Cat bottomed down 6% and slowly rebounded. If you sold it near the low, hey, listen, man, you're a dope. As the stock ultimately closed up more than 1%. Why? Because this is not the same old Caterpillar, where a shortfall like the one that we saw this morning would result in giant layoffs, suspension of the buyback, maybe even a dividend slice. This is the new Caterpillar, a company that's been shaped by Jim Umpleby. Man, hey, listen, he's not in Peoria anymore, he's in Chicago. And it was from the beginning of 2017 when he took over that all this has happened. You see, he made it clear that he had it with Cat's episodic business model. He was done with the miserable boom and bust cycle that had made this one of the toughest industrials to own, and frankly, one of the best to short. Most investors didn't believe him. I mean, how the heck do you make a machinery company less cyclical? But Umpleby wanted a clean break with the past, and that's exactly what he gave you. So when Caterpillar slashed its forecast, what does he do? He tells us the buyback will continue unabated. Dividends not in danger, thanks to relentless cost cuts. The new Cat makes more with less. If you're listening to the conference call, you could tell the moment when the bad story turned good, because it's when the analysts started sounding totally befuddled. I mean, their questions created a very positive impression. It was like, wow, I mean, hey, this isn't as bad as it used to be. This is a new Cat. It really is more consistent. It really can deliver good earnings during a worldwide slowdown. I know I was spooked initially. I figured it was the same old, same old. I was wrong. Then, even better, Caterpillar shared some monthly machinery numbers, which showed month-to-month improvement, just when you least, of course, expect it. This new Cat is the kind of industrial you can stick with during a downturn. Rather than worrying about Cat, I think you should buy it in weakness, knowing you'll be protected by that buyback and that dividend. Now, there's also Boeing. Boeing. Okay, the news from Boeing lately, about as bad as it gets, right? We're seeing almost daily revelations about the alleged wrongdoing behind the 737 MAX fiasco. And these stories, they make you feel like only a masochist would want to own this stock. But then Boeing reported a pretty nasty number this morning. And what happened? Down 5%, down 10%, maybe down 15%? No, it went higher. It rallied a percent. Has the market lost its mind? No. Management simply laid out a scenario that said, safety willing, we'll see the 737 MAX in the air sooner rather than later. Of course, it's hard to predict when, and I thought the headline writers simply didn't read the conference call when they predicted the plane would fly again in the fourth quarter. What Boeing really said is that the 737 MAX will be ready when the regulators say it's safe, which might take a little longer, even though accounting rules make it so they had to make a projection. The projection was a bullish one. The call reminded me that Boeing actually is still benefiting from a fabulous secular trend that's been obscured by all the headlines, the relentless rise in air travel. There are only two companies on Earth that can produce large quantities of commercial aircraft, Boeing and Airbus. believe it or not, the airlines need these planes. No matter how bad the 737 MAX story gets, is bad, Boeing's practically the only game in town. And look, this company is not a one-trick pony. It's got a major service revenue stream, got a gigantic defense business, and of course, they make plenty of other planes that aren't the 737 MAX. Hey, like the Dreamliner. Let me put it this way. If the Chinese government wants to offer a gesture of good faith as part of the trade negotiations, they just need to pick up the phone and say, you know what, we want a couple extra Dreamliners each month. That's all it would take. No, it's not a perfect story. We still don't know when the regulators will let their most popular plane fly again, and Boeing still hasn't been able to get ahead of the relentless drumbeat of bad headlines. But for the first time in a while, you know what? I feel like maybe the press, including moi, has gotten too negative. I expect more horrifying revelations, more ugly headlines, more reports issued by countries where there were tragedies. But you know what? I think we may be through the worst of it, which means we can go back to focusing on the otherwise terrific core business. Third is Apple. Now, not that long ago, analysts turned horribly against Apple. You remember? I mean, like, when I thought of Apple, what did I think of? Spam. All right, claiming the new iPhone 11 was a bust. The Chinese are going to boycott the thing that President Trump hated. I mean, it was unbelievable. Stock spent the whole month of May getting steamrolled. But Apple's made a magnificent comeback. And last night, Katie Huberty, the terrific tech analyst at Morgan Stanley, shocked Wall Street with a gigantic price target boost. Huberty argues that we should stop worrying about potential shortfalls, start focusing on how much Apple can make from its new TV offering, which everyone is poo-pooing. Now, Huberty's the axe in Apple, the analyst with the best understanding of the business, and she says the new service stream could be huge. When Apple reports next week, it's very possible the stock will sell off. I mean, seeing as its run going into the quarter, including another $3 and change today. But Huberty makes a compelling case for my longtime mantra: own Apple, don't trade it, especially since the rollout of 5G will be the biggest iPhone refresh cycle of all. So I get what will happen. Of course, the company report, all these moron analysts, I mean, some of these more circumspect analysts will say negative things. Stock will come down. You get another chance. What about the stocks that got hammered even though they didn't deserve it? Chipotle's plummeted more than 5% today after reporting an amazing quarter. That said, I'm not shedding any tears for Chipotle. Stocks slipped more than 80% for the year. When I look over that quarter, I think you're being given a rare buying opportunity here. And if Brian Niccolo had come on the show, he was on another show, that's fine. That's fine. That we all play together. We're team players here. But he's got a loyalty plan ramping up, some food costs going down, including, by the way, did you hear? He found another source for avocados. Hey, Bar San Miguel's getting crushed by avocados, not him. Do you know they make them in Peru now? And he's got digitization initiatives taking hold. What's not to like? It had 11% same-store sales growth. For heaven's sake, the stock was due for some profit-taking. Two more while I'm throwing them at you. Outstanding company like Microsoft reports an outstanding quarter. That's a yawner, right? Outstanding is outstanding. A student is an A student. But how about this? When Tesla reports a surprise profit, it's to the moon, Alice, and that's what happened this evening. I think I know the secret to Tesla's success. CEO Elon Musk is tweeting and taunting less, spending more time making Teslas. The bottom line, this is the most difficult part of earnings season. Right now, when the reports are overwhelming, it's very hard to make sense of the action. Caterpillar disappoints and roars higher. Chipotle knocks it out of the park and gets hammered. But it all makes sense when you consider the expectations coming into the quarter. And the stripes get changed like at Caterpillar, where the numbers are worse than feared, but the conference call is better than we could ever hope for. And management is unexpectedly talking about protecting the dividend and buying back even more stock. No, the market hasn't lost its mind. There's just more going on than you may be aware of. Hey, how do we go to let's go to Joe in New Jersey. Joe.
Mr. Cramer, thank you for having me on.
My delight.
Yeah. I currently own Cisco Systems since 2009, and I'm hearing mixed reviews from the analysts. I also heard at Carol Tomei from Home Depot's on board.
Yeah, Carol Tomei joined the board. She joined the board. That's a very good point.
Yeah, and then Cisco just acquired Cloud Cherry. So do I still hold on to it?
Well, Cisco Kid remains a friend of mine. Now, has it done well lately? No. Is it expensive? No. Does it have a good yield? Yes. Is Chuck Robbins doing a fine job? Yes. Is it dangerous to own? Already came down. I say, listen, I know investing can sometimes get confusing. I mean, I know people who are confusing spam with Apple. How absurd is that? But it opened Ooh, where's the straw? I love drinking Spam juice. Everybody knows that. But other times, like earnings season, the action makes total sense. And, well, frankly, it's what we bank on and what we believe on Mad Money. Hey, here's a question. Should you hitch a ride on the rails with CSX? Tonight, I'm hopping aboard to talk about everything from the auto market to energy. Do not miss my exclusive with the CEO. And medical technology is poised to generate nearly $600 billion in sales by 2024. After the recent moves higher in the space, you're probably wondering, is it time to take profits? Why don't you wait for my take? And it was a game of musical chairs last night. Nike, ServiceNow, SAP, all announcing big CEO changes. Tonight, I'm talking to two men in the mix. Sir, mix a lot. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.